Stock market investors happy after China and the US agreed to cut tariffs temporarily and de-escalate that trade war that had sown turmoil in global markets. We're joined by Tyler Ellegard, portfolio manager at Gradient Investments. Thanks very much for coming on the show, Tyler. Happy Monday. Quite the relief rally in stocks right now. What's jumping out for you?
Yeah, look, I think for the market, it's a art of the deal rather than long-term tariffs right now. At least that's what the indication is, because we're seeing the deal with UK last week. We've seen the discussions with Canadian Prime Minister Carney, and now over the weekend, we've had the China discussions in Switzerland where there was a tentative agreement. Obviously, more details are to come, but both sides saying that really the differences weren't that far apart. So I think this is more of the art of the deal, which means that these companies don't have to worry about the reciprocal tariffs that were put on place, about a month ago, a little over a month ago at this point, may not be a long-term effect. So I think that's why we're seeing the reaction in the markets that we are right now.
This was what the investors were waiting for, it looks like, some kind of a step down or a cool down in the trade war between the US and China.
Yeah, absolutely. I mean, when we think of who Trump is, right, he is a deal maker at heart. We've seen all the shows. We've known who he is since his first term and now in the second term. We know that he likes to make these negotiations. But I think the concern was he was pretty steadfast when he announced these tariffs that this was going to be great for the economy. We want to bring manufacturing back. We want to reduce the trade deficits. And so I think the uncertainty was, are these going to be long term? And how are we going to navigate this with the price increases here in the U.S. when you're talking about the significant amount of tariffs being placed on our major trade partners? And so the uncertainty was causing a lot of angst in the markets. And so now that we have this somewhat of a framework for a path forward for negotiations, especially with some of our larger trade partners, whether that's Canada, maybe there is something coming with a change in the USMCA, and China specifically, because that's a significant trade partner, just like Canada is. But having 145% on China is a bit egregious in our opinion. And so the fact that we could potentially have that come back down, maybe it doesn't come all the way down to 10% or 25%, but anything is better than 145. So we'll see what the agreement is and what the tariffs are going to be on China, or maybe they go away altogether. Who knows? But I think the market and investors really just wanted something of certainty that we know that there is negotiations going to be happening with countries.
As far as I know, Scott Bessent, the Treasury Secretary, is saying the tariff on China will remain at least 10%, but that may be a moving target, of course. We know, as you say, we're in negotiations.
Yep. And I mean, 10% versus 145, yeah. I would take that any day of the week, right? And it's easier for companies to go to the suppliers with 10% and say, if you guys take on, let's call it 4% of the 10, we'll take on 4% of the 10, and we'll pass about 2 to 3% on to the consumer. That's a lot more manageable from the consumer standpoint here in the US of what are we spending versus, 145% or anything above the 10. That it's harder for companies to have the suppliers take on some of that cost when we're talking about the 145 or 80 or 60, whatever the numbers were being floated around prior. So 10% is much more manageable.
You have some stock ideas for us. Eaton, ETN. Remind us what they do and why you like the look of this one.
Yeah, so they're the power electricity for data centers. And so when you start to think of the earnings that we had last week, the hyperscalers reported, we had Microsoft seeing a lot of demand and then finally being able to meet that demand with supply. So CapEx is remaining strong. We saw Meta actually increase their CapEx for AI. So the reports last week from the hyperscalers give me great hope that even though Eaton has pulled back on the concerns of maybe AI pulling back in spending, that's not the case that we saw last week. And so this company will be the big beneficiary of that, because when you start to think about data centers, infrastructure, that's where Eaton sits and plays.
Microsoft, there are reasons to like this one. Obviously, they have their fingers all over industry, all over IT. What particularly attracts you?
Well, look, They have been the laggard of the Mag 7, of the top 10 names, however you want to split the big companies apart, but they have been the laggards over the last, call it 2 years. And so when you start to think, that's mainly because of their performance in Azure and their cloud business. And now, after last week's report, we saw how strong their demand actually is because they've had a lot of supply constraints. And so the concern is that maybe the demand just isn't there for Microsoft and they're going elsewhere, whether that's Alphabet, Amazon. But the report that we got, they saw significant growth, right? And so it's from a laggard standpoint for Microsoft to deliver that kind of quarter on the AI front, on the cloud Azure front, is very important for this stock. And so I think if you want to pick any of the Mag 7 going forward, this is actually one of the names that I would pick as a winner for this year.
And finally, Dexcom, remind us what they're all about and tell us what attracts you, please.
Yep. So they're a glucose CGM, continuous glucose monitor for type 2 and type 1 diabetics. And they've been able, so about a year and a half ago, they had a what I would call a hiccup. You see on the chart here, the big drop there. They changed up their sales force at a time when GLP-1s were like Ozempic were taking the market by storm. And so what they've been able to do lately is they've finally been able to get their sales force to build those relationships back up with the clinics and the doctors. And so you're seeing a strong growth in sales as well as product mix going from their G6 to the G7, on top of that penetration into the type 2 market. And so I think if you're looking for any name outside of the hyperscalers or AI, and you want to be in the healthcare tech space, I think Dexcom is a perfect name to be buying at this point.
Thank you very much indeed for joining us.
Thanks for having me.
That's Tyler Ellegard, Portfolio Manager at Gradient Investments. Up next, we are going to discuss this US and China trade armistice. Our guest says he'd be happier seeing the US strike deals with actual allies, not a dictatorship that is a global rival. We'll be right back.